So as you guys know, Microsoft is my second largest stock in my entire portfolio, and because we're now in 2019 and they just recently announced their December quarter earnings results, I thought it'd be a good time to do a full analysis on Microsoft and let you guys know what I plan on doing with the stock going forward. And so we're going to talk about all of that and more in today's video. Let's get started. What's up everybody, my name is Ala and welcome to my world of stocks. As always, make sure you hit the like button if you enjoyed this video. Lets me know that you want to see more stocks being analyzed in the future, and it also helps the channel survive and grow. But with that being said, let's go ahead and start by looking at Microsoft's business. Now this isn't going to be easy because Microsoft seems to have their toes dipped in just about every single market out there that you can think of, but let's quickly summarize a few of them, and if you want to add to any of it, you can go ahead and do so in the comment section. Now Microsoft is mostly a software company and are very well known for their Windows operating system and Microsoft Azure cloud platform. When looking a little closer at Windows, we can see that they control over 76% of the desktop operating system market, easily beating out both Apple and Google. And even if we include phones and tablets, Windows still comes in right behind Google's Android with about 36%, but still ahead of Apple's offerings. And there were even a couple months that Windows controlled more overall market share than Android in October and November. I know that's not a fair comparison because Android is more for mobile phones, but I personally found that fascinating considering how so many people in the world use cell phones, and even in some of the poorest countries out there, many people still manage to have a cheap Android phone, but probably not a Windows computer. Although that figure is probably skewed due to big corporations having many computers available to their employees, but it's still an impressive statistic nonetheless. And that massive market share is important because it's a very reliable and enormously huge pool of customers that they can tap into whenever they release a new version of Windows. Don't forget that Windows 10 just barely overtook Windows 7 for the first time this past year as more businesses and customers made the switch. The great thing here is that if you want to stay up to date with the latest features and even security, you pretty much have to upgrade at one point or another, so it's a pretty reliable business model. But moving over to their cloud platform called Microsoft Azure, which I think it's actually pronounced Azure, but I prefer saying Azure just because it sounds a little bit better, but they've been seeing tremendous progress in gaining market share there. And when looking at RightScale, who publishes a cloud report every year where they survey over 500 enterprises with over 1,000 employees, you can see that in 2018, Amazon still had more adoption than Microsoft, but Azure actually grew more year over year at 35% versus Amazon Web Services at only 15%. Not to mention that this growth will likely continue when you consider that over 65% of those cloud users were projected to increase cloud spending by over 20% in 2018, with about 35% spending over 50% more. And according to Synergy Research Group, just the enterprise software as a service market alone, which entails business software being delivered via the cloud, is worth over $20 billion a year and is growing by 32% a year. And Microsoft holds a commanding lead there over anyone else with about 17% of the market, thanks to their expertise in collaborative software that is unexpendable to big businesses like Office 365, Exchange, Skype for Business, and so on. Speaking of which, when looking at other collaborative platforms that Microsoft owns, they made some pretty big acquisitions recently in GitHub in 2018 and LinkedIn in 2016. Now, I don't personally use GitHub myself, but I do have a couple of friends that love the platform, and they tell me that it's basically the one-stop shop for coders and developers, as they can share code and collaborate on projects amongst a number of other things. And while Microsoft did pay a very large price for them at $7.5 billion in stock, it essentially invites tens of millions of developers to use Microsoft products and enter their developer environment. And because developers are really behind every mega technology trend out there, this will open the door for Microsoft to reach enormous new audiences. And when looking at LinkedIn, well, you're talking about the largest professional network in the world with over 562 million users in over 200 countries and territories. And while Microsoft again paid a hefty price tag for the acquisition at around $27 billion, the investment has already started to pay off as their productivity and business processes segment increased sales by $6 billion in their fiscal 2018, and LinkedIn alone contributed half of that as they increased sales by $3 billion to a total of $5.3 billion, which is an increase year over year of around 130%. On top of that, Microsoft is also heavily involved in high growth markets like data analytics and artificial intelligence with Azure Cognitive Services, Azure Machine Learning, Azure Cosmos Database, which is the first globally distributed multi-model database and is already bringing in over $100 million in annual revenue. And they also have Azure Database for MySQL and PostgreSQL that assists in bringing open source applications to Azure. And they're seeing rapid customer adoption of their Azure Databricks platform that assists in data preparation, advanced analytics, and machine learning. And finally, Microsoft is also working hard in artificial intelligence research to match human parity in object recognition, speech recognition, machine reading, and most recently, language translation. And they claim that over 1 million developers have already adopted their cognitive services, which, by the way, that whole GitHub acquisition, that's going to be heavily implemented into everything that I just mentioned. So it's going to be a very critical component of what their future in developing artificial intelligence applications will be. And then there's two more areas that I want to talk about, and that's gaming and autonomous driving. Now, the gaming market has always interested me because I love playing video games myself, and the market is growing by billions of dollars a year and should reach $180 billion by 2021, according to Newzoo.com. However, there are some pretty big concerns in the gaming market right now, as companies like EA and Activision Blizzard are taking heavy criticisms for shady practices like loot boxes and microtransactions. And while I am invested in Activision Blizzard myself, I stopped buying the stock a while ago because their management has been making mistake after mistake, including a horrible decision to announce a mobile game version of their Diablo franchise at a PC event where nobody really cared about mobile gaming. But that's a frustrating discussion for another day. When it comes to Microsoft, they've been much more consumer friendly in gaming lately, as they've not only added backwards compatibility to old Xbox games, but in many cases they actually improved their visuals and performance, upgrading several titles to either 4K visuals or even 60 frames per second performance. In any case, I'm excited for Xbox's future as an investor because they're making some pretty big moves that some analysts are speculating could turn them into the next Netflix of gaming, which would be a huge deal as the industry is continuously shifting away from hard copy games to a more digital future. And as much as I hate that as a traditional gamer myself, the writing is on the wall when you consider that GameStop stock, which by the way is a traditional brick and mortar gaming retailer, has plummeted, having now dropped almost 70% in the past 5 years alone. In any case, Microsoft is seeing success in their digital Game Pass subscription service that gives gamers over 100 different games to play for a monthly fee of, I think it's around $10 right now. And they reached over 57 million monthly active users for their Xbox Live online service, and they're investing heavily in Mixer that allows gamers to not just play games but also watch games, which could end up being a big play on the whole esports movement. And they acquired 5 new game studios to help them with their first party lineup of games, which has pretty much been like the biggest criticism of Xbox. And all of this has led to them recording record revenues in fiscal 2018 at over $10 billion, which is pretty freaking incredible. But if we take a closer look at the gaming chart, we can see that most of the growth is actually coming from mobile gaming, which has a compound annual growth rate of over 26%. So another thing that Microsoft is investing heavily in is what they call Project xCloud, which is a way to play Xbox games portably on your cell phone or tablet by connecting an Xbox controller to it and essentially using the phone screen as a display for the game. And you might be thinking, well, how can phones be powerful enough to run AAA Xbox games on them? Well, the answer to that issue is that Microsoft is literally having the games run on Xbox hardware on servers that are connected to the cloud via their Azure infrastructure. And then the games are streamed over to your smartphone and displayed on the screen. Now, I agree that this isn't exactly operating in the mobile gaming segment, but it still has a lot of promise and will probably be seen as an innovative and compelling feature by gamers. And even if this hurts Xbox console sales, All Microsoft really cares about is getting people hooked onto their platform and using their services, because Microsoft is first and foremost a services company, so the more services that they can sell to customers, the better. Now, when looking at the autonomous vehicle market, Microsoft is once again taking full advantage of Azure by using it as the base for cloud and connected car services, which was recently announced that it will be used by Volkswagen in over 5 million cars starting in 2020. By the way, Volkswagen has some pretty ambitious plans of their own, as their CEO has said in the past that they plan to sell electric vehicles with comparable performance to Tesla's for competitive prices. And they're even opening an automotive cloud development office in Seattle near the headquarters of Microsoft to speed up the progress. And their CEO has also stated, Volkswagen and Microsoft, with its unique technological expertise, are outstandingly well matched, and together we will play a key role in shaping the future of automobility. Not to mention that Volkswagen and Ford are also looking to work together on autonomous vehicle research, which is leading to some speculation that Microsoft may have a future partnership with Ford as well. In any case, we should now transition to their most recent earnings and take a look at how all of these different products and services are performing. Now, keep in mind that this is the December quarter, basically the tail end of 2018, but Microsoft sees it as their Q2, their second quarter of fiscal 2019. I know that's a little confusing, but you can just kind of think of it as the fourth quarter of 2018. That's kind of how most companies report it. But for Microsoft, technically fiscal 2019 second quarter. Anyway, let's get into their earnings. Now, revenue jumped 12% year over year, operating income jumped 18% year over year, and non-GAAP net income jumped 14% year over year. When looking at their different segments, all three of them climbed year over year, with their productivity and business processes segment jumping 13%, their intelligent cloud segment jumping 20%, and their more personal computing segment jumping 7%. And breaking that down even further into some of their products and services, we saw huge increases year over year in areas like Office 365, which jumped 34%, LinkedIn jumping 29%, Azure jumping 76%, Windows commercial products and cloud services jumping 13%, Surface jumped 39%, and Xbox software and services jumped 31%. And their balance sheet is one of the strongest around, with over $127 billion in cash equivalents, and short-term investments, over $156 billion in current assets, over $258 billion in total assets, and only around $50 billion in current liabilities and $166 billion in total liabilities. So while their short and long-term debt is a little high, their current assets can more than make up for that, and they are well positioned to continue to reinvest in their already high-growing products and services and make more acquisitions in the future. So given those amazing results, the stock soared after earnings, right? Well, no, not really. As is usually the case with Microsoft, most analysts consider them already priced to perfection, although I'd argue that their forward PE of 20 isn't really that high considering the amazing company that you're getting in return, but investors wanted to see a strong beat on earnings, and instead Microsoft came in line on revenue of $32.5 billion and even beat on cloud revenue estimates, but they missed EPS by just 1 cent, which they would have actually beaten if it wasn't for a one-time charge related to the new tax legislation, which many companies are taking advantage of right now. So it's pretty dumb, in my opinion, that the stock actually sank after earnings, now having dropped by close to 2% in the last couple days respectively, to now trading at around $102 per share. But still, this remains one of the most stable stocks out there, having climbed over 170% in the past 5 years with a really smooth looking chart, and it's actually a pretty good dividend growth stock as well, with a low yield of only around 1.76%, but a good payout ratio under 50%, and a 5-year growth rate in the double digits at over 12%, and 15 years of straight dividend growth. So in conclusion, I think that Microsoft is this amazing company that has been dominating for so long and is still growing surprisingly at a pretty high rate. But investors just seem to never be satisfied with the stock. And I think one of the reasons why is, when you consider that in the last few months, we had pretty horrible market conditions and many stocks were dropping like 20, 30, 40, even 50% in some cases. Microsoft didn't really take that big of a hit, and they're still relatively close to, their all-time highs. So I think right now everybody expects them to just perform, amazingly well, and analysts are already, giving them pretty high expectations. And Microsoft is still growing, right? They're growing at a very nice rate, but they're just not they're not exceeding expectations by huge amounts, which is leading to the stock kind of struggling in the short term. Having said that, I absolutely believe in Microsoft's future. I plan on holding this stock for many decades if possible, unless something changes fundamentally with the company. But, if everything kind of stays the way it's going and they keep, attacking these markets, these really high growth markets, and making these acquisitions that I think are brilliant acquisitions and is setting them up perfectly for the future, then I definitely want to hold this stock long term. Having said that, I've done most of my buying under $100. I have bought a little bit over 100, but most of it has been under 100. So my cost basis is still well below 100. And that's really where I buy more heavily into Microsoft. So in these market conditions, I don't think it'd be too crazy to expect Microsoft to dip below 100, especially with all the concerns right now about 2020 being the next, recession dooms year that, every year we get we get predictions for the next recession. Right now, so they're pushing it to 2020 now. And so I think investors are going to be very picky. And if Microsoft just keeps growing like they're doing, performing very well, but not exceeding those expectations by huge amounts, then, I think Microsoft could continue to struggle. And the market overall could bring the stock down a little bit too. We've seen situations of that as well. So in any case, if it, dips below 100, that's where I start to buy more. I am right now increasing my cash position. I'm hoping to exit 2019 with about 30 to 40% of my portfolio in cash, just because so many people are expecting there to be, a recession in 2020. There's a lot of concerns going on, and there are definitely some valid concerns there, debt and all kinds of different things. So I am trying to increase my cash position. And but I'm still a buyer of Microsoft because my time horizon is still in the decades. And even if we get any kind of recession crash, in the next year or two, I would definitely use that as as a opportunity to pick up more Microsoft stock, because I really do believe in them. But who cares what I think, guys? Let me know what you think. Leave your comments down below. How do you feel about Microsoft? Are you invested in Microsoft? And hit the like button if you enjoyed the video. Thank you for all the support, guys. You guys are awesome. All the nice comments you guys have been leaving lately. I've actually been struggling for the first time in the channel's history. I've been struggling to reply to all the comments because I've been getting so many, and there's just been so much support. So I just want to say thank you, and I still try my best to get to all the comments and reply to as many as I can. But thank you for all the support. I will see you guys in the next video. Take care. Bye-bye.